Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, May 12th, 2013. Happy Mother's Day to all the moms that may be watching out there. All right, S&P continues to chug higher. We had a little bit of a liquidation break, and I say little bit in Thursday's session here, but other than that, we took back that move on Friday, and when I get into the profile here shortly, I'll talk more about the liquidation break and what it may have meant. But overall, even just looking at the candlestick chart here, you can see there seems to be a lack of sellers in this market as we continue to go higher. I am still keeping my focus here on the upper end of the trend channel, which now has moved all the way up to 1643 roughly, so that's going to be an area to look for. I am still interested in initiating shorts up at that level, looking for some sort of a retracement at least to the midpoint of the channel. That's kind of an ugly line there, but to the midpoint of the channel in here on a retracement, which would be a decent move. As I was saying in prior videos, when you get far away from the 20-period moving average, which is the green line on the chart, you have to be aware of how many points away that is. That's this space here between the green line, which is the 20, and where price is right now. The rule of thumb is that when it gets over 40 points, the market is due for a pullback. 50 points is really extreme, and you can go back and look at this historically in S&P charts. And right now, with the 20 MA at 1590 roughly right here, and price closing on Friday at 1633.70, you can see that's about 44 points away. If we make it up to the top of the channel here, which is about another, let's call it basically 10 points away, right? You'd be well over 50 points overextended from the 20 MA, and that would probably be a pretty ideal area to initiate some shorts. All right. The Dow is basically in the same boat as the S&P, very overextended. I've drawn the same channel here from the November 12th lows, and this one's kind of weird because you can see it kind of undulates on both sides of the channel. So I'm really still using the S&P as my main benchmark because it appears to me that the channel is a lot cleaner, and it's just kind of respecting the highs and lows of the channel and the midpoints, etc. So that's what I'm looking at. All right, let's take a look at the profile here and get a little bit deeper into what happened this week. As I was saying, on Thursday there was quite a large liquidation break where the market sold off from the highs here and cracked all the way down to about 1620 from around the 1634 area up in here. And as I was saying earlier, I sent out a tweet and said, look, I really like to, I am letting out some shorts right here, starting to short the market. And then the market had a big break right after that, which was great, and then basically rallied right back. So some interesting points happened here on Thursday. There was a little bit of excess high here, and overall the 3 days did form a swing high. However, notice that Friday's low did not get lower than Thursday's low. So right off the bat, even though whatever selling there was here wasn't strong enough on Friday to even take it lower. And what's really interesting about these 3 days, a couple points here on the profile, is that notice that this line here in the middle, this section here, this is what's known as the point of control. This is the fairest price to do business, and it was the same for 3 sessions. This is relatively rare that you have this. So basically what this is telling us is that the greatest amount of futures volume and the largest amount of time, as you can see from the TPOs, which is the number of letters going across, especially here on Friday, right, all the way out to end period, here out to end period as well, right, but here wider, definitely here all the way to end period, very wide. The greatest amount of time was spent there as well. So not only time, but the greatest amount of futures volume was spent there. So what I'm seeing in this advance in terms of structure is that it continues to be really poor, and that's why I'm very confident about trying to put on a short at higher prices at the 1640, because I believe that it will lead to a larger sustained liquidation break that will last at least a couple of days, and could be some new money sellers, which would make it, I suppose, more than just the liquidation break, some sort of corrective activity, which would be a playable event, let's put it that way. And one of the things in the profile that points to this poor structure is, for instance, on Thursday you see that when I was calling the short here at the top, the point of control was still down here. The fairest price to do business had not migrated up at all with price. It had actually just stayed low down in here. And value at the time was much lower. It was all in here. You can see that value was relatively unchanged. It was just completely overlapping on Thursday to Wednesday, and yet the market pushed up to some new 2-day highs. So anytime you get like a new high and yet value doesn't really migrate higher yet, or the point of control, the fairest price to do business, stays up here, it's telling you that buyers are essentially buying away from value. They're getting themselves long in the hole. Remember that value is really the most important thing in the futures market, not price, because price is acting as an advertising mechanism and is not really the same as where value is. Okay, so that was one of the things I was looking at. And in Friday's session, basically the same exact thing happened, is that notice that the point of control is once again in the middle of the range. So this 1626 continues to be very, very important, obviously, to the futures market because so much time was spent here. And yet the market closed very, very strong into the close and closed back up here near the highs. Wasn't able to make a 2-day high, so technically you still have like this swing high formation of the high in the middle, bookended by 2 lower highs, but I'm not putting that much stock in that because notice, as I was saying, Friday's low didn't take out Thursday's low at all. So, the pattern would be much stronger if it did. And again, we closed high. We closed up here. So, but once again, like the prior day, we closed up here. Where's the migration of the POC higher? None really. And where's value? And this is where it gets really interesting. Price closes way up here on Friday, closes down here on Thursday. So you have this net change in terms of price, correct? Here's the settlement on Friday, or Thursday rather. Here's the settlement on Friday. And yet, what happened to value? Is value higher? No. Did the point of control migrate higher so that the fairest price to do business is higher? No. Value is actually overlapping to lower. And that's problematic. So when I say problematic, I mean problematic for the bulls, meaning that they're building a rally here on poor structure. This is not, if price is going to go higher, it needs to have value migrate up with it. So all that's really happened over these 3 days, honestly, is that we've built a 3-day balance, and that would obviously be encompassed by the 3 days here. And what will happen in the coming week is going to be relative to this 3-day balance. Do we either look above and fail? Do we look above and go? Do we look below and fail? Or do we look below and go? Okay, that's how you basically trade any type of balance here. Those are the scenarios that can happen. Or obviously you can stay in. You can just stay in balance. That's the other scenario, right? Instead of the looking above and failing or going, or below and failing and going, you can stay in. But when the balance is already comprised 3 days, the pressure is building. So I don't really look upon that in the coming week as a viable outcome. I'm more thinking either look above and fail or look below and fail. And more importantly, or just as importantly, I should say, remember next week to watch this area very closely, because it will be very interesting to see where we start to get price acceptance in relation to this 1626 area. Above it obviously probably brings in more buyers. Price acceptance below it probably brings in some sellers and targets some of these lower areas in the profile and the charts. All right? Okay. Let's get into some couple of trade ideas. I don't really have that much this week since all the charts are really overextended, but I will give you a couple of ideas, and I want to tell you I'm still watching gold a bit, which is not a trade just yet, but is acting kind of interesting. The main thing on my list for next week is LinkedIn. I'm noticing that there is prior high resistance here on the chart, and you can see clearly that we topped here, and then we broke through, and then we traded in a range for quite some time, and you can kind of box this off like so. We traded in this range, and what I find interesting about LinkedIn is here's where its earnings were, and stock gaps down and then rolls over, and look where it's coming to. It's coming right to this support area here, and I think this 165 is going to be buyable in the coming week for a bounce trade, and if so, the target would be the midpoint of the box. Okay, the midpoint of the consolidation range at least. So that would mean that it would be a buy at 165 and a first sell at like 170. You can probably get out of half of the position, or I would say maybe most. It's up to you. Usually go half or 3/4. Leave some on with a runner, but that would be the first target. to the midpoint of the range, and then the ultimate target would be to the upper point of the range. And I'm not really counting this. I'm counting this as kind of like a range here. I'm not counting this area here. Okay, so that's a trade idea for next week is LinkedIn. Hopefully, I've got a lot of emails from a lot of you that benefited from the ideas in recent video weeklies talking about, for instance, that Google was going to get really strong and might go to 1,000. I talked about that back here in mid-April, right in this area, and lo and behold, I mean, the stock has moved from like 780 to 880. It's been like a $100 run from there, so kudos to everybody who benefited from that. I got a lot of emails on that one, and I also got a good number of emails on my comments on Amazon saying that the bottom end of the channel here would be support and that the stock would rally, you know, right up. It was squirrely, though, this week. It was very, very difficult to manage, but it did, you know, grind much higher, and the stock's actually a good deal of points up off from that level there. All right, last but not least, gold and metals. I continue to think that there's no trade here in gold, but it is on my radar just because of the way that it's acting. Same thing I've been saying for a while is that I think that everybody thinks that this bounce here has to lead to lower prices, but I don't really understand why these lower prices are just kind of grinding lower, and there's no real panic here. So there's no trade basically, but I think there could be a trade basically if this top part of the channel gets violated to the upside, because I think that would be kind of like shock and awe and would surprise a lot of people. So it would be right in here, and that would move the price up. I think it would surprise a lot of people. I think that in this area here, between here and there, there's still a lot of people short. You have this gap obviously doesn't really exist in the gold contracts because they trade all the time, and this just trades overnight, or this just trades during the day. This is the GLD. But it is definitely something I'm looking at, and obviously for illustrative purposes in the video, I'm just using the GLD ETF and not the futures. But this trend channel is important. Friday's action, again, same thing, where you had opportunity to take it much lower, and they did, and then bam, middle of the day, boom, it just comes right back and catches all the shorts off guard. So I'm going to be watching the top of that, and I'll keep you posted if there's any trade to the upside. Nothing yet, but it just doesn't feel like a short to me here. Silver is in a similar situation with the same top line here connecting all the highs, and I think it could also surprise some bears if it was to rise over that level. All right, that's all I have for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.